Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at the gold market. So gold right now, well, stands in a kind of the win-win situation. It's just because it has two different driving factors that actually act in opposite directions and support gold in a different environment. So first, when the United States trade dollar were rising in the recent few weeks, and yields was rising on 10-year yield and in general in the United States. This definitely was the headwind for the gold. But on the background of the Middle East conflict, investors have ignored that and keep buying the gold. When this factor right now is a bit fading, because it's a really big stream of the news is housing from the Middle East, and investors start watching for something else. Another factor starts working. It's now becoming the backwind. It's just because you could see that on a dollar index we see the starting pullback, which is support gold, and simultaneously we see that the 10-year yields right now, after they hit the 5%, stands on the monthly overbought. So both of these factors suggest moderate pullback here, as on the yields as on the dollar, which is potentially supportive for the gold. It means that the retracement that we discussed on the gold market, it's not the fact that it will happen definitely. I suppose this only combination of the two different factors might be that could put gold to the downside. This is some relief on the Middle East tensions, definitely when we see on the horizon some attempts on the negotiations. And second, significant continuation of the rally on the interest rate yields on the markets. So this combination could trigger more or less moderate pullback. But until both factors are acting in actually opposite direction, so we see first is tensions on the Middle East still stands in uncertainty without any perspectives, so nobody clearly understands what will happen. Second, when you see the significant pullback on the interest rate yields in the United States dollar, that's together support gold. And we could get some sideways consolidation before upward continuation, so without any significant retracement that we have discussed previously. So we need to keep an eye on this. On the lower time frames, if you take a look at the fall time frame chart, we do not see something really special. It seems currently that market is more moving to the idea of the sideways. It's just because normally when the market hits important targets and resistance, the pullback is taking more clearer shape, so it becomes more evident and doesn't take too much time when the market's showing the first downside reaction. It's more or less significant. But here we do not see it. Yes, market has opened down with the gap on Monday, but it was very short term and it's returned back up and now stands in the tight pennant, which is potentially can be called as a bearish pattern. So more suggests like the consolidation and building an energy before the upward breakout. So that's when the things that we need to keep an eye on. Today and in this week we will get important inflation data, the consumption expenditures, and also first numbers for the gross domestic product. Maybe if we will get some really strong numbers, and this will suggest more activity from the Fed with the rates, so maybe it's also might be some holding factors for the gold. But for now, with the performance that we see here, I wouldn't consider taking the short position by far, and prefer to wait for some days and see what the shape market will take. So maybe it will be some more extended consolidation. We will get more clear signs of the bullish dynamic pressure. In this case, we will be able to consider taking the long position on the gold and see what will happen with the data release that we've got later in this week. So that's actually all that we have currently on the gold market.